It's time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Hollister Biosciences, the symbol is HOLL on the Canadian exchange. It's a 24-cent stock price, $65 million market cap. What this company does, they are a licensed manufacturer and distributor of recreational cannabis and cannabis products in the states of California and Arizona. Revenue for Q2 was $17.6 million US, an increase of 107% year over year. And for the first 6 months of the year, revenue was $40.7 million US, up 330%. Hollister also reported profitability during the first 2 quarters of 2021 of about $3.5 million or 1 cent per share. And the balance sheet is decent with about $7 million in cash and just under $4 million in debt. The company also reports an insider ownership of 50%. We like to see management and board aligned with shareholders, primarily for growth-oriented microcap stocks. There is that small amount of profitability, which again puts the company well ahead the vast majority of other listed cannabis companies. But on the other side, looking at the other end of the equation, one thing that I think the company could do a better job of is explaining their story and the growth opportunity. The company does provide some information on their products and markets, but after reviewing the press release, the corporate presentation, the MD&A, I wasn't really left with a great understanding of what will differentiate this company from its competitors. There is certainly a lot of growth in the US cannabis market, but there's also a lot of competition, and that competition is going to increase in the future. The best answer that I can see as far as how this company is going to differentiate itself from its competitors or what the advantage is right now is that they're already well established in a few markets with some brands. So this is certainly a factor, but it may not be enough given the size of the company. Profitability while present is still relatively small. And then also revenue was actually down from Q1 in Q2 from Q1. And it is expected to be lower in the second half of 2021 relative to the first half. So overall, I think that there are some decent fundamentals here, but it is a smaller operator still. It's high risk, it's higher risk, and the story is still developing in the sense that the sustainability of the revenue growth and the profitability are more uncertain than we would like. We have a company that we prefer in the cannabis space, which is much more established with more clear competitive advantages. For Keystone, Hollister is a company we certainly would monitor. It, as I said, it does have some good fundamentals, potentially some good potential going forward. We would be looking closely at the profitability over the next few quarters and into 2022, and as well any changes in the pace of revenue growth and developments in the growth strategy. Certainly a company that we can learn more about and monitor over time, but it's not something I would necessarily rush out to buy right now, certainly not in any type of a large quantity.